Welcome to Challenge Forex. My name is Steve and join me today as I go through one of my previous videos just a few weeks ago. It's using moving averages to see if it's worthwhile using these indicators of this strategy to pass a prop firm challenge. And the idea being trying to make money fast from prop firm trading, not one of these strategies where we sort of make a lot of small trades over 2 or 3 months. The video I'm referring to is on your screen now. This is the simple EMA strategy, and this uses 3 moving averages, a 9, a 20 and a 50, and we look on the chart for a pullback and continuation trade. So we've had some suggestions from a few followers, and let's have a look at these suggestions now, and we will see if they may actually be possibly worthwhile testing out, or if it's maybe a waste of time. So the first one is the MACD crossover. So one of my followers suggested that we use a MACD crossover as another layer of analysis for moving averages. So I'm guessing that we would use the moving averages as a trend filter and look for the entry on the crossover of the MACD line. So let's have a look on the chart and see if we think this might actually be worthwhile and where we would see entries. Okay, so we need, let's say 3 moving averages. We need a 9, a 20 and a 50. Okay. And for MACD crossovers, we want to go in the direction of the trend because that is the purpose of the EMA strategy in the first place. So looking at, so let's look at a 15-minute chart for this one for starters, and you can do this on any time frame. Okay, so now using the EMA strategy alone, we would see here the moving averages just crossed over and changed direction from the long trend to a short trend. We had a pullback at this stage to the moving averages and a close below. So we could have entered really on any of these candles here. This is the first big move on this candle. We would have a stop loss if we went above the recent swing high of about 20 pips, and a take profit, or we could have done a 2 to 1, 60 pips, 63. So we could have actually got a 3 to 1 out of that if we happen to get out right at the end of this candle. So this was just using the moving average alone. If we were looking at using the MACD crossover as well, we find the crossover was here. So before we actually had the indications on the moving average. So the crossover at this point would have been counter trend. So that would be no signal at that stage. If we're looking for a cross down, it wouldn't be until this area here. First red line is after this candle, so our entry would have been about 25 pips and we would have made 30. So it's really only a 1 to 1. So I'm thinking at this stage it would have been better to enter without the MACD. Let's have a look at some more examples to see if we think there is some sort of opportunity for this one. Okay, I think we've got something on this day. We've got a downtrend. We have a change of direction. So we're now looking at an uptrend. If I was using my EMA strategy alone, I would have probably entered on this candle. So that's about a 30 pip stop loss. We've made 1 to 1 on that day. However, if we held it, we could have actually got, let's see. around 90 pips would have been the maximum we could have got. So we could have actually got a 4R trade out of this one. Looking at the crossover of the moving average, it would have been on the same candle. So in this case, no real benefit of using the MACD, only that it basically confirmed the same thing that we already knew in the first place. So still questioning that one at the moment. So let's look at another option here. Using the 3 moving average indicators, we would have had an entry here. This was a change of character or a change of direction from an uptrend to a downtrend. We have here a pullback to the moving averages. We have to wait until all 3 are in line, so we're looking at possibly here we could have got an entry. It's only a small stop loss, but the better entry would have probably been after this candle. Stop loss, we're looking at probably about 15 to 20 pips, and the move was around 55 pips. So that would have been a positive move. If we were looking for a confirmation from the MACD, we would have had it on this candle. So at that point, the stop loss would have been 24, and we didn't quite get a 2R out of that one. So using the MACD in this case, it would appear that we would have actually been entering the trade a little bit later than we would have if we were using the moving averages alone. Let's look at one more example here. We can see we're on an uptrend, and on this particular day, the entry using the 3 EMAs only, we would have had a pullback at this stage here, then a close above the moving averages. Either of these 2 candles would have been the entry. The stop loss would have been about 20 pips, and we would have made a 3R on that trade within, say, only maybe 2 hours. Looking at the MACD crossover, where the entry would be, we're looking at the entry after this candle. So we're entering late again. The stop loss is about 25 pips, and we would have got 55 out of the trade, so it's about a about a 2R trade. So again, using this example, I'm thinking we would have got in earlier if we weren't using the MACD for an entry. The next suggestion we have is to try using the RSI crossing the 50 line as a trend strength indicator. So let's have a look at this one to see how it will work out. So we have the RSI standard settings. It's RSI 14. We have a 50 line. So we want to look at the trend first of all using the moving averages. So here we've got the 3 moving averages going in a downward direction. So we'll say short in this case. We want to see, well, we have to, I guess, consider 2 different things. Are we going to use all 3 moving averages, or would we just have one moving average and a crossover of the 50 line for the entry? So let's have a look at some examples, and maybe we'll try this on the 1 hour chart, see how it looks. So using the 3 moving averages, we would actually have an entry here. So pull back to the moving averages, and then the first green candle that closes above. We would have an entry here with about 20 pips and 72 pips gain. So we would have got a 3R out of that trade, or we could have at least got a 2R if we were trying to be conservative. Now, in this particular case, I'm not sure if that line actually did cross it. Yeah, it actually did cross right here, and then crossed up again. So it pulled back to the 50 line and then crossed above. So we would have had an entry at this level. So around about the same place anyway as we would have been trading if we were using only the moving averages. So let's look at some more setups to see what we've got. And the thing is as well, we don't want to be looking for any false setups, or we don't want to see any false setups. So we've got here we've got a little bit of spaghetti on the RSI, crossing below, above, below, above. So let's just say the moving averages are in line. The first cross above is right here. So the entry, if we put our stop loss just before, just under the swing low, we would have had about a 30 pip stop loss, and we would have got stopped out on the next candle. However, if we had a bigger stop loss, say 45 pips, we would have been able to ride this one out. So I'm going to say at this stage, we probably would have got stopped out on that entry. However, we do have another entry straight after this one. If we had have entered after this candle with a stop loss of say 50 pips, we would have got a gain of about 95. So not quite a 2R. And again, if we were not using the RSI as a filter or an entry and just using the 3 EMAs, we would have actually entered on the same candle as well. So in this particular case, it turned out probably better not to use the RSI, because we did actually have this first signal here was a false signal, and we would have got stopped out before taking a good entry afterwards. Let's look for some more entries here. And again, we have a pullback to the moving averages and then a close above. So this is where we would have entered if we were using just the moving average strategy alone. It's got probably about a 33 pip stop loss, and it went up to about 110 pips. So we've got a 3R trade. If we were looking for the RSI entry, we would have got it right here, which is pretty much the same entry point that we would have had without the RSI. So look for one more example. We can see here spaghetti in the moving averages. So I call this a sideways movement, and we're not going to enter while it's looking like this. We have a downtrend here that could be an entry. So let's have a look at entry points first of all without using the RSI. We had a pullback to the moving averages here just after a change of direction. We would have had an entry with say 45 pips stop loss, and let's see, we could have got let's see, 100 pips here is maximum. So we could have got a 2R trade, or we could have held this one for longer and got about 225 pips maximum out of the trade. And we look at the moving average, there was no entry here. Looking at the RSI, there was no entry here. The first entry we got was at this stage, and so we're looking at for an entry here with the RSI right at the close of the day with a 60 pip stop loss and 160 pips take profit. So it would have been a positive trade, but I'm thinking the entry would have been better without using the RSI at this stage. So I think by looking at these two examples, we're probably better off using the EMA strategy, using 3 EMAs only, and not using the RSI or the MACD as a filter. Although they were great ideas, I don't think it's really going to improve the system at all. The next suggestion I have is using a TradingView indicator, Smart Money by Lux Algo. The problem is with this particular strategy, I'm actually trading with MetaTrader 5. So the indicators I use are for MT5 and the expert advisors that I'm coding for myself, and downloading from the web are actually on MetaTrader 5 as well. So I'm going to sort of say, this may be a great idea if you're using TradingView, but not so much for MetaTrader 5. Now the next question I have is on my recent video regarding saving money on prop firm challenges. If you haven't seen this video yet, go through and have a look. I discuss why I don't actually buy $500 100k challenges straight out. My strategy is a little bit different to a lot of other people, and there's probably others doing the same thing, but I normally go in for a 10k challenge first, get funded, get a payout, aim for around about a 9 or 10% gain, so I'm making around about $800 to $1,000 back from my 10k challenge, and then using that money to purchase a 100k challenge. So watch this video and you'll see exactly how I do that. But we've had a comment on this particular video from Paul, and Paul's problem is that he is working full time and he's got a bit of trouble finding time to actually do the trading. So I've actually got this same problem in a way as well, although my circumstances are not so bad because of where I actually live. So I'm based in Sydney, Australia, and for me, my trading day starts with the London session. So I get home from work at around about 5 p.m. each day, and during the winter months, that is the start of the London changeover, 5 o'clock my time. So I'm getting in basically straight after work, and my trading session starts right away. Now in summer with daylight saving, it's a little bit better for me in one way. It gives me a little bit more time to get started with the trading. So we have a time shift of 2 hours. So that's because of daylight saving. So we've got 7 p.m. is the London changeover during my summer months. So that is also a good time for trading. So either way is good for me. And a lot of people might agree that I feel that the London session is the best session for trading, or at least for me, it is the best session for trading. So how do you get around this if you don't really have an option? So if you're living in the US, that's probably going to be, in one way, not really such a disadvantage. And let's have a look at the chart and I'll show you what I mean. Now, when not trading the London session, if I'm trying to do something like swing trading, if I have a shortage of time and I can't look at the charts each day, for example, one thing that I have done previously is using a daily chart and doing swing trades, so holding them long term. So let's have a look at the chart, move it to, change it to daily. And I'll show you an example of what sort of a trade I would actually do in this case. Now in the US, assuming you live on the eastern side, Eastern Standard Time, the Asian session is basically the beginning of the day, and that happens in your evening. So I'm not sure, depending on your location, but it could be around 7 or 8 p.m. each day. So that being the start of the day, the ideal entry time is to avoid the first hour of the day. So when the broker time clocks over 0 or midnight, that is the start of the new trading day. And in the first hour, you'll probably have seen this before, there's crazy spreads where we can have spreads up to 50 pips on some symbols, and not a good time to be entering the trade. So that is low liquidity and widespread. But after that first hour, so any time after, let me check the time. So I guess probably anywhere, depending on your location, from about 6 p.m. onwards, so like maybe between 6 and 8 p.m. if you look for an entry point, you want to be entering after the after the change of the new day, so after the midnight on the broker time on the platform, and when the spreads have started to lift as well, so they're starting to balance out a little bit closer to zero where we want them to be. And I would actually do swing trades at this point instead of normal day trading like I would do with the London session. And I'll use this same chart as an example where to get in to your trade. I don't think we really need the RSI for this entry, so I'm just going to delete that indicator. And let's just look at moving averages only. So if we've got 3 moving averages and we're looking at a daily chart, where can we find entry points here? Now the idea is to do this on every currency pair. So we're looking at maybe 28 pairs plus gold. You can do gold and oil as well if you like, but look for swing trades. And here's some examples. So we would have like here, for example, we have a pullback looking at a long trend when the price is above the 50 moving average, and especially when we have 3 moving averages all lined up. So if we have a pullback here to the moving averages and a close above, so this is using the same moving average strategy that we were previously using for day trading as well. So entry point would be here after the close of this candle above the 3 moving averages, and they've all lined up. We've got 150 pips stop loss, and we can get about 270. So you could get a 1.5R trade out of this one. Another place where you could think about exiting is trailing each day. So once you've gone into profit, trail the moving average each day below the previous daily candle. So we'll have move the average up, move the stop loss up to this level, up to this level, up to this level, and we would have got stopped out here. So we would have made, in this particular case, around about roughly 100 pips on that trade. So not quite a 1R, but trailing your stop loss on a daily basis. All you need to do is go in at the start of each new day on the broker time, so 7 or 8 o'clock Eastern time, PM that is. You can go in, just move your stop loss up to the next level, and you'll get stopped out automatically when the lines cross over, or when we have a change of direction such as this one here. Looking for a few more examples where you could actually get in. So there's going to be some places where you've got a bit of sideways movement here, which is not so great, but then there's other places here where you have long trends. So on a daily chart, between these lines is actually a full month of trading. So we'll have roughly 20 days or 22 days. So let's see, it looks like 21 days for that particular month. And so that's what I would do in this particular case. So do swing trading on a daily chart. You only need to look at the trades once a day, and that is, if you're in Eastern time, around maybe between 6 and 8 PM each day. Okay, well that's it for answering the questions that we've had recently. So watch out for my next video, and I'm going to look at more strategies for passing prop firm challenges, and I will also go over some of my recent trades that I've had as well, show you how they're going with passing the prop firm challenges. But this week alone we did actually pass another phase 1 and a phase 2, so we are getting another live trading account, or I guess you can call it a funded account anyway, coming soon.